So I make videos and I don't get as many views as some people. So I went to YouTube and I searched the stock market today, and I see a young man that I respect. He's made his living in real estate and became a YouTuber, and he now has about 5 million subscribers. And he did this video, and it said what everyone needs to do with their money as soon as possible. And I said, wow, there's some insight. I need to see what that's all about. And so I go and I watch his 14-minute video, and he does a tremendous job of showing past history that all the way back to 1907, that the market crashes, but it always comes back. He doesn't get into real good detail as to how long it takes to come back, but it always comes back. And so he kind of ends his video where I wanted to know is, so where do you put your money? He basically said, leave it where it's at. If you've got 20 years, you're not going to need it anyway, and it will come back. Well, okay, not all of us have 20 years, and I got to thinking, well, yeah, but you just don't leave it just anywhere. You put it where it has the greatest growth potential. So I went to ChatGPT and I said, okay, here are the crashes that occurred. And I did 1907 through 2020. And I said, now, looking at the crashes and how much they went down, and then how long did it take them to recover, and what sectors or segments of the market actually recovered best after each of the crashes. And starting in 107, it said he said, the market went down 50%. Then the very next year, it went up 50%. And then the following 3 years, it went up 40%. So it had a nice recovery. But it said that the crash was started by some bad banking practices, and the industries that came back were the industrial, steel and machinery, and the railroads. And then it goes goes to 29, where you had an 89% crash, and yeah, we had a 815% return, but it took 20 years to get it. So there wasn't too much there. Then we went to 1945. This was post World War II, and the crash was 26%. The very next year, it went up 10, and then over the next 3 years, it went up another 20. And this was basically at the end of World War II, and what stimulated and what got the best returns were housing and construction, automobiles, and consumer goods. Well, that makes sense too. The soldiers came back, they started making babies, they needed houses, they needed cars, and consumer goods went up. Then the 74 crash was 48%. The very next year, it went up 29%, and it came back, and it was industrials, manufacturing and steel, consumer staples, and discretionary, and energy and materials. So what it pointed out was, what ChatGPT pointed out was, yes, the market recovered the very next year, 39%, and then over the next 3 years, another 35%, but certain sectors did much, much better. And that's the answer to the question. So where should you put your money if you don't have 20 years? So learning from the past. No, the Black Monday was 87, and it dropped 22.6% in one day. The comeback was in manufacturing, what they call smokestack industries like steel and heavy machinery. And that's when technicals started to appear, and the financials recovered again. The financials usually cause the mistake, and then they benefit from the mistake afterwards. So then we're up into 2001, and I totally remember this because I was a financial advisor, and I saw the dot-com bubble, and it was created by over-enthusiasm about dot-com companies that weren't making any money. And you could draw a parallel to AI companies today that aren't making money, or quantum computing companies that aren't making money. But there is a technical aspect of it that is depressed as a result of some circumstances that are not directly affecting them, and they will come back substantially. So then we had the 2008, that was a subprime banking crisis. Again, many times the crises are caused by the banks mismanaging their affairs. And then in 2020 was the subprime crisis. And again, we know that was the COVID virus, or excuse me, it was the 2020 was the COVID virus. And we know that that was basically turned around by Jerome printing money, which then created some inflation, which caused a downturn. So it all come back. So now we're at 2025. And this is a totally manufactured crisis. The AI was coming on. We were building data centers. Jensen was making new and greater GPUs, and then Trump came in and said we're gonna do tariffs, and he basically screwed up the whole thing and created fear. Now, once that fear is dissipated, and you got to recognize Donald cannot allow and will not allow this fear to go on, because his number one objective, as I've said many times, is basically to walk out of the office in 4 years and everybody say, my God, that's the best president the United States has ever had. He turned this economy around. He brought down our deficit. He brought manufacturing back to the United States, and that is the best thing. And the other thing you got to realize, never in the history of governments has one person, other than Adolf Hitler that I can think of, controlled the social economic structure of the world like Donald has over the last 2 months. Nobody has done this. He's just totally disrupted the apple cart, but we have to read his book. And we will understand who Donald is, what his biggest objective is, and it's all wrapped around his ego, and then we can invest accordingly. So as the question was asked relative to this, the 2025 crash, what everyone needs to do with their money as soon as possible is, I hope you followed the guidance I gave you 2 months ago and said it's time to go to cash and put your money on the sideline, because the market is going to correct. It is overvalued. Palantir is not worth 190% of its earnings per share. That was its PE ratio. And there's going to be a correction. And be prepared to buy in. Now, again, Donald was a gift from heaven. I knew the market was going to correct. I just didn't know why it was going to correct so rapidly as it did. And so we have a manufactured event, and then we have on the other side of the manufactured event the biggest change in our world in the history of mankind that is going to happen in a very short period of time. So we will get a tremendous surge up that is magnified by the 21% reduction. So what I do is say, okay, in the stocks that are going to grow, answering the question, what do you do with your money that you put on the sideline? And today, you identify those AI stocks, whether they be in semiconductors or data centers, or the software that is going to deliver the AI to you, and you look and you see who are which of those stocks that are the best stocks for the future, much as manufacturing and steel and iron and energy was in some of the past crashes. Who are the most depressed stocks that are going to benefit from AI? So you create a chart that says, okay, in the sector that we want to invest in, who is the furthest off of their 52-week high. And so we create that column. That's on my tell sheet. And then we go and we say, okay, based on their financials and their technicals and their past and their future growth of revenues and earnings, who are the companies that are going to, 3 years from now, January the 1st of or 2nd of 2028, who are the companies that Wall Street believes are going to grow the most between now and January the 2nd, 2028. And that data is all out there. It's all available. And if you'll pay for the ChatGPT super program, it will tell you. It will do the financial analysis I call it a financial strength analysis, and it will tell you then, based on financials and technicals, what is the price going to be? Because the price of a stock is merely a multiplication of two numbers, and that is their earnings per share times their PE ratio. Now, different companies have different earnings per share and different PE ratios, and the PE ratio is very relevant to the industry that they find themselves in, such as software companies have higher PE ratios than manufacturing companies because software companies don't have a lot of investment in equipment, and they have very high gross margins, and they can grow that business much faster than Ford can grow their business. So they have different PE ratios. Well, if you research those PE ratios, and ChatGPT or whatever your AI platform can do that for you, you can equate what that PE ratio is going to be on January the 1st of 2028. You can go and find in Wall Street's data what the analysts are projecting that earnings per share is going to be based on the financials of the company past and future, and you just do multiplication. Earnings per share times PE ratio, and you know what the price is going to be. Now, if Donald does something else to screw it up, okay, but we know that eventually AI is going to be a part of our lives. It's already a part of my lives. I shared with my tribe what it did last week, and just took me to my knees. But it's coming. It's going to be a part of our lives. It's going to change our world to a magnitude greater than the internet has changed our world, to a magnitude that greater than, maybe not as great as electricity or fire, but the CEO of Google said it's going to be bigger than fire or electricity. I don't know about that. But that being said, to answer the question where everybody needs to put to do with their money as soon as possible, is look at the 52-week, how far off the 52-week high, and what Wall Street is projecting their price is going to be in 2.5 years, and just dollar cost average into them. When you see the stock is down below possibly your cost basis, you buy more and bring your cost basis down. You bring it down to, okay, of the 60 stocks, there's 15 of them I want to own based on the price that they're going to be on January the 2nd of 2028. Now, are all of them going to be right? No. But the majority of them will, and some of them will be over and some of them will be under. But you can literally, what I've done with my portfolio, and say, this is how much I want to allocate of my savings towards this investment strategy. And based on what the price is today and what the price will be in January of 2028, which stocks do I want to own? Well, those who are going to give me the greatest return, plus I need to allocate some towards the next 3 years. Right now, we're building the infrastructure. So I want to be heavy on semiconductors and data centers. In the future, they're going to be delivering to you and I. The companies that are paying for the GPUs and the servers and building the data centers are going to be, they're making that investment so they can deliver AI to me. So I need to be building a holding in them as well. And those are no-brainers. I mean, that's Amazon, Google, Microsoft. They are going to deliver you. Again, what happened to me last week with ChatGPT, where my AI agent said to me, I know a lot about you, Kerry, because you've been asking me a lot of questions over the last year and a half. What is it I don't know about you? And I told him, her, him, what, it, something that was important to me, that changed my life. And she came back and said, we need to share that with the world. Let me help you get this done. This is a coach. And it's a machine. It's a machine out in space. sitting in a huge data center with millions of GPUs saying, I want to help you achieve beyond your grandest expectations. That's the opportunity. That's the answer to the question. What everybody needs to do with their money as soon as possible. There it is. There's your answer. Okay, I don't have 5 million subscribers, but if you want to help me get there, just hit that subscribe button. And please share this video with your 1.3 million closest friends and get my views up. Talk to you more about this.